Well, good afternoon. Good afternoon and welcome. Welcome to another of our Wednesday webinar series. We will continue every Wednesday looking at resources available to small business impacted by the pandemic, looking at the most important topics of the day to help you navigate these very, very trying times. I'm Kelly Bearden. I'm the director of the California State University Bakersfield SBDC. And we're going to take a look at the very latest on economic disaster lending. We're going to look at stimulus programs and a wide range of assistance that is soon or now available for small businesses. I will be conducting this webinar. Our organization has done probably 120 of these. This will be the first one I've done publicly from home. And I'm doing it at home based on our mayor, Karen Go of Bakersfield, who recently said that Bakersfield is counting on you to stay at home. So Mayor, I'm doing that. Now, you're going to have to please excuse any intrusions that might happen. You know, sometimes on our webinars from downtown Bakersfield, we'll get a fire truck roll down and we'll get sirens and things like that. But it's a little different now. We could get a doorbell. We could actually get some street noise, a gardener, etc., or heaven forbid, the dogs. The information I'm going to present today comes from a variety of sources. It comes from my experience in working with disasters going all the way back into the 1980s, late 1980s in Central California. We had a very devastating freeze. And the freeze impacted a lot of businesses, broke a lot of pipes, killed a lot of citrus trees. And that was actually the first experience that I had with the disaster. So over the years, we've had quite a few of them. And recently, at least in our area, we've had the Ridgecrest earthquake last year that I'll probably reference. And also we had a fire in the Kern River Valley in 2017. So the information is going to come from a variety of sources, such as our resource partners from the SBA and GoBiz, the Governor's Office of Business and Economic Development. We also have national authors that we've been leaning on, such as Rhonda Abrams and Paul Edwards. We have many small profit, nonprofit entities and business groups, publications like the Wall Street Journal. While I have not discussed this specifically with any of my SBA partners, and other than indirect briefings and some trainings we've gone on, a lot of what you're going to get is my opinion today, and it's going to be drawn from those factors. It's fluid and a dynamic situation that is changing literally by the minute. These are indeed challenging times. It is truly business as unusual, as I like to call it. So let's get started. Okay, so SBDCs are located throughout the country, and we're located in California. Our region is the Central California region, and we have 5 centers. I'm really encouraging people to reach out because we are open, as the sign says, open for business. And we have centers in Bakersfield, Fresno, Modesto, and along the Central Coast in Salinas and San Luis Obispo. So just to give you a little notification of other things that'll be coming up, like I said, we're going to be doing these webinars every Wednesday, and they're all going to be focused on pandemic relief until we get past this part. We do have a special one tomorrow. We have a special Thursday edition of Webinar Wednesday, and that'll be telecommuting tips and trips. And we actually will have 3 professionals come in here and actually, well, come in here virtually and actually give us their telecommuting secrets and what they've done over the years. So that should be an interesting program for especially those that have really never actually done anything or been able to telecommute in the past. So March 25th, what's new today? Well, first of all, let's start off with a good note. It's National Medal of Honor Day. And there's a lot of Medal of Honor winners over the years and heroes that have been presented with the honor, and recognizing them today is vastly important. So really a real happy National Medal of Honor Day to all of you out there. And I'm sure maybe there's 1 or 2 that have received such a prestigious honor. Also, why not just take a moment to also recognize some of the heroes we have going on today that you really would not have expected a month ago. For example, let's recognize grocery clerks. grocery clerks that are standing back there after countless customer. And I'm pretty sure most of you, like myself, have made a frequent or infrequent trip to the store. And they continue to work the long hours and continue to put themselves right in harm's way up in front of everybody with the virus going on. We're going to talk a lot about today about the stimulus package and talk about what's going on with two versions that are now starting to float around, and discuss those a little bit, because that's really going to be the lifeline to a lot of our small businesses. We're going to also look at the SBA disaster platform. The SBA disaster program is bombarded. It is actually, as of this morning, the site has been down since about 2 a.m. SBA has requested that you fill them out by hand, scan, and email in until the platform comes up again. So not really something we expected to be talking about, the platform being down, but it had been sluggish and it had been a problem lately. But let's first talk a little bit about what might be coming down the pike as far as a stimulus program. The federal is coming, like we said. We got it passed in the Senate last night. The House has a version that they're discussing. I believe leaders of both houses are meeting and trying to hammer out a deal with the president and get all parties involved, and hopefully it's coming very, very, very soon. There'll be the second one. Initially, there was one for $8.3 billion, and that was for health and vaccines and also medical attention to try to thwart the virus as it moved forward. So likely the stimulus is going to be finalized this week and could be as early as today. As I mentioned, we have a divided Congress as two bills are moving forward. We do have the one passed in the Senate. There's a lot of logistics problems with getting one done in the House because the House has actually left Washington, D.C. And to remotely approve it, it would take a unanimous motion with no trailers or anything else attached to that bill. We're going to talk a little bit about what's likely different from 2008, and this is a different stimulus program from 2008. And also the fact that there is going to be probably more and different forms of stimulus, a real possibility that that's going to be coming soon. So let's talk about the Senate version first. Reminder, this is not law, and details for this are extremely hard to find. I guess the arrangement is still being hammered out, and negotiations are still going on to try to get everybody on the same page, but it has passed the Senate. And what has been released is that it has in there about $367 billion aid for small business. And apparently mostly, if not all of that, is in the form of loans. That is starkly different from the House version that we'll talk a little bit about also. From what we know of the Senate version, and we do know it's a $2 trillion package. The last one in 2008 was only about $1 trillion. And this one's going to take on a whole different look than that one because it's going to be geared toward individuals and consumers. And part of that is going to be putting $600 per week in self-employment insurance for the first time. So hopefully that is in the final package that comes out, because I have had a number of you reach out and say, I'm self-employed and for whatever reason, I don't have work right now because of the crisis that's going on. It could be that you work with a hospital. It could be you work for public safety and all of their attention is geared somewhere else. Also in the Senate version is that $1,200 per adult and $500 per children. This will phase out, and actually those earning more than $75,000 or 150 filing jointly, the amount phases out. It's designed to quickly get money so individuals will have money in order to basically survive with the massive layoffs that are happening. There will also be sick time, paid sick time and family leave. Small businesses will be required to provide, and it's going to be different from the paid sick leave and family leave that we have in the state of California. We're trying to get a handle on that, and we'll try to get that up to speed. But, you know, and a lot of these topics we're not going to touch today. We're going to try to cruise over them, but what we're going to try to do is to show you the financial resources that are out there and the ones that are coming. And that is mostly going to be the economic injury loans and also some of the stimulus that's going on and expected to be coming. So that is, up to 12 weeks of paid leave, and along that lines, a lot of HR issues, a lot of human resource issues. And there are resources out there in your communities. For example, in Bakersfield, we've had our chambers of commerces have joined with a local law firm. And for the last 2 weeks, they've been doing some HR related specific. We don't give legal advice at the SBDC. So this is an excellent opportunity for you to Google and try to find some of these resources if that's what your need is and that's what you're looking for at this time. So the Senate version, $2 trillion, we don't know a lot about it. We've heard that there's about $500 billion for bigger businesses. Bigger businesses, they are going to need to be bailed out as well. But $2 trillion, there's really not a lot out in there for small business. We saw the $368 billion, basically a sixth of $2 trillion. I guess the old joke is $2 trillion just doesn't go as far as it used to. So we also have a House version that's out there. And the House version, from all things that are being said by a lot of business groups and other individuals and others, tends to be more small business friendly. The one thing that's likely not in the Senate, again, we don't know everything that's in there. We know there's a state and local government, there's some money for hospitals, there's some money for bigger businesses, and there's a lot going out for the $1,200 per individual. So, but not a lot for small business. The House version is a little more small business friendly, whereas one thing in there, it had economic development or economic injury grants. And these economic injury grants would not have to be repaid. The one thing that we're seeing a lot of and we're hearing a lot is that a lot of businesses just can't take on additional debt. And the main program right now is going to be the economic injury loan that we'll discuss in a little bit. So with that, small businesses many of them are not capable or ready to set up and ready to take on additional debt. So this grant program would be there to try to help small employers and businesses that demonstrate that they really can't. And, I've added this other little thing. At this time, we really need to think out of the box. Even though I don't like that expression, we really need to really be creative. And, what about equity? What about the federal government taking equity and maybe a pool of these grant funds or something along those lines if the grant funds are liquidated and there's none left. So I think there's ways that we can be creative. One thing we did learn in the 2008 stimulus is that it was mostly for corporations. And for corporations, a lot of them paid back very handsomely. And the stimulus really didn't cost nearly the $1 trillion. Many people claimed that it profited because so many of them bounced back, so many of the industries. That isn't going to happen this time because it's so much is going to go for consumers and other areas to where there's really not an opportunity to recapture the amount that's spent. So some of the other provisions in the House, and if you feel strongly about this, you need to talk to your representatives and talk to them about the versions that are out there and kind of some of the things. It's likely we're going to see another stimulus package. So when we do, these are things that we need to be thinking of in the next coming weeks on what we really need and what we missed out on in this particular stimulus package. So small business payroll support. In the House version, it has about $300 billion that's forgivable to cover short-term payroll. And that's in order to payroll cost in order to keep and entice small businesses to keep their people employed. Right now, it's extraordinarily difficult. Small businesses don't have the cash flow. They typically and historically don't have cash flow, even coming out of a 10-year boom cycle. They do not have the cash flow in order to cover those short-term employees. So this would cover the short-term payroll cost of about $300 billion across the country. Commercial lease mandate on evictions. So this would kind of do something that would force landlords to keep their current business in there from any eviction that's caused as a result of economic injury from the coronavirus. And also, can the state, my question I have here is, can the state actually assist with small business stimulus in some way? So again, here's kind of the difference from 2008. It's going to provide much more relief to the consumer. And again, the consumer is the one that is really needed right now and really vital, even though you're going to see the pain spread across the board. It's wide and it is deep. The stimulus is going to be much bigger. Right now, we're already talking about a stimulus that's going to be twice the size. One of the limitations in the last bailout in 2008 was that it took about 4 months to get out there. The hope is that if this comes out faster and bigger, that the relief will be there to stem a lot of the damages that we're going to be looking at from the economy. There's going to be more strings attached as Congress and the president shape policy. So whereas the last bailout, we saw the auto companies bailed out, and fortunately they're stronger now. We saw the housing agencies such as Freddie Mae and Fannie Mac, they were bailed out and the government took ownership of that and profited. AIG Insurance was a huge insurance company that actually would have failed and would have really caused major harm throughout the economy. They were given stimulus money and they were bailed out. And, some companies didn't make it. You saw banks were given money, but investment banks, Bear Stearns for one, and Lehman Brothers were two that were allowed to fail. And likely this is going to happen again. There are going to be businesses, both large and small, that unfortunately aren't going to be able to be served and be around. So those are some of the differences in the stimulus and the bailout. And I really can't stress enough for you to stay involved and stay tuned in to what is happening with the stimulus. It's going to affect everybody. And it is happening right now. I wished we had more information. I got an email literally about 5 minutes before we got on here today. So it is happening, it is changing, and it is dynamic. So stay tuned. Well, let's shift a little bit and let's talk about disaster recovery process. And let's talk about SBA and their disaster lending process. Typically, most disasters, I believe anyway, the largest component of that is going to be physical disaster loans. When you think of disasters, oftentimes you will think of hurricanes and tornadoes and earthquakes, such as we experienced in Ridgecrest. And you'll think of big disasters like floods, Katrina, the effect of the flood and hurricane there. So, typically, on very, very large disasters, you'll have FEMA go in and they'll work hand in hand with the SBA and they'll work on a lot of different programs. And what you'll see is that the physical disasters are what SBA does most of. They will lend to homeowners and to renters in trying to get their lives back together, in addition to small businesses. This disaster is completely different because it is vastly, almost probably 100% economic injury. So the economic injury that is going to occur from this is generally a smaller portion of the disasters that occur. Now, the reason I bring that up is because we've been working with clients to get into the SBA disaster online portal and to actually submit a disaster loan request. The portal is really designed for physical disasters, even though it is also designed to include the economic injury. So please, if you do go back in and you navigate that, if it's up or if it comes up soon again, and you're able to actually navigate that, keep that in mind that it's really kind of designed for physical disasters. So the disaster process, after it occurs, there's certain things that happen between the federal and the state, and then all of a sudden get the declaration and we go. We've had the declaration now in California for about a week. And the SBDC, free of charge, we're helping people with their loan applications. We're providing guidance and information on inquiries and best places to go. We're working remote as well. So that's important to keep in mind as well. We're working on people's disaster plans and actually emergency response. We're looking at other resources that are available because there are other programs that are out there. We'll know more when this happens, what's available, but we're going to find that there's going to be other lending programs that are out there as well. We're looking at also sales recovery because that's going to be a big aspect of the recovery. As quickly as everything dried up and as quickly as sales went away, we need to get those sales up, and we need to diversify a sales stream and even look at opportunities after all. So after the disaster, there's opportunities, and even now. So we're about 8 days now into a statewide disaster here in California. The interesting thing to remember is that this is for working capital for small businesses that have suffered substantial economic injury as a result of the crisis. These are sections out of the press release that was sent out. I copied and just slammed them into the video or the presentation. And SBA injury disaster loans can offer up to $2 million in assistance. Now, one thing that's important to recognize that these loans are not ones that you put in an amount and say, gee, I've looked at my cash flow for the next 6 months and I need $50,000. That's not how it works here. This is a different program, whereas what happens is that you supply them your financial information. And we'll go over the information that actually goes into the disaster loan request. And then they make a determination. And I get a lot of calls and emails about, hey, how did the SBA come up with that? And I don't know. I do know it's designed to meet the needs short term. It's designed to basically be there in cash for when your business is experiencing this loss of revenue. And it's designed not to make you whole. Another question we get is on business continuity insurance. And some people do have business interruption insurance. Our risk management professional at the SBDC informed me that he does not think in most cases, or maybe all cases, that it's going to apply. So he believes it is an exemption in about all policies, but he encourages those that have this type of insurance to at least reach out to your insurance carrier, an insurance person. So this disaster loan is not designed to make you whole. It's not to compensate you for all your losses and your profit and overhead and things like that. It's to get you to be able to survive the next 6 months. And so oftentimes these awards and these loan amounts are generally based on that need that you have for that 6 month period of time. So what can you do to what can you use the money for? Well, you can pay fixed expenses, debts, payroll, you can pay accounts payable and other bills that cannot be paid because of the disaster's impact. Currently, the interest rate for this, and this could be subject to change when a disaster relief comes out of the stimulus program, but currently it's at 3.75%. And the key here is it's for businesses without credit available elsewhere. Now, that's kind of a tricky definition. Credit available elsewhere. So some instances where you might have credit available elsewhere is going to be, say, a line of credit. Line of credits over the last decade got harder after the last recession, the Great Recession. And they got harder to find and harder to get. So, but if you're fortunate to have one of those lines of credit, that is a credit available elsewhere. And the SBA will find that on your personal financial statement when we go over that. Interest rate for nonprofits is 2.75%. So generally the term for these loans are either 15 up to a maximum of 30 years. So what they're trying to do is to minimize the longer term repayment ability for the client. We do realize, and everybody realizes, that this is debt that's not really helping you grow your business. It's not helping you attract more customers and being able to expand and add to your workforce, or maybe even reach out and buy a land and building and actually move out of that rented property that you have. All those are not happening. Not taking on more more product lines and more other aspects that are out there in order to grow a business and and to actually sustain that over time. This is debt that's just going to try to get you to survive. So longer terms, 15 and 30 years really do help with that particular cash flow aspect. So as we've talked about the stimulus, we're anticipating that this is just going to be one piece of the federal government's response. Here's really email and phone numbers. I don't really, other than grabbing this from the press release last week, I don't know why I put this out there. I really think they're being slammed either by phone and by email. And really the best way is to try to get online and get through the portal and to get through this particular process. So let's look at what this process looks like. Now at the SBDC, if you'd like, we can email you a packet of these particular forms. You know, shoot me an email or put it in the survey. At the end of the webinar, a survey will pop up, and the survey will allow you to look at, put in there that you'd like a copy of the disaster business loan application forms. They're pretty readily and easy to find on the internet, but these forms that we're going to go over right now, I think are really helpful. Well, right now it's the only way you can apply because you need to print them out, fill them out, scan them, and email them in. But hopefully that's changing soon. The website could be down, not because it's bombarded, but it could be down potentially for changes to make it easier in some of the problems that they're seeing. And we'll go over some of the problems that my resource partners have told me they are experiencing with the application process that's now been going on a little over a week. So a lot of this first form is just the basic disaster loan application. And there are two different forms. There's one that's designed for sole proprietors. This is form number 5. There's also one called 5C. The one thing that we're really seeing a lot of is people that they're checking physical damage or business contents that they're applying for. And really right here in box 1, you're applying for economic injury. And there are a number of places through here that are consistent to where you really need to check the box for economic injury. So that is what is being done. So, but on your survey, and if you have questions, we're going to try to field some questions afterwards. Put on there that you want this. We'll have some other resources that are available. I'm sure many of you have already asked if there's going to be a copy of the slide presentation. Yes, there'll be a copy of the slide presentation, and there'll be an on-demand recording of this particular webinar. So all those resources will be available to you, but please take the survey and mention aspects of what you're experiencing crisis right now that we didn't cover or you'd like to see covered in the next few Wednesdays. That's the information I really want to see. So contact information, pretty straightforward. It's a double-sided, one-page, 8.5 by 11 form. A lot of it is contact information, and we'll go over some of the criteria that it really seems to be causing people problem. The next form is going to be this particular form, which is just a fee disclosure for compensation agreement. This is just the SBA trying to make sure that you're not, swindled, or you're not paying an exorbitant amount of money to have this process done. The SBDC is out there to assist you do this for free. There are a lot of online resources. There are people that are really kind of helping out. And so there's a lot of resources that are really, really helpful and really valuable that are there to assist you right now. So it's just basically sign and deliver that form. Also, we're looking at personal financial statement. The personal financial statement is the personal or individual's version of a balance sheet. And so what this does is it lists your assets, it lists your liabilities, and your net worth. So if you filled out a home application loan for a mortgage payment, for a mortgage loan, you have done this form before. And there are a lot of factors on this form that the SBA takes into consideration when determining how much to loan to you. One of those is going to be if you have any collateral. We'll get into the collateral later, but it will identify either through some of the collateral you might have in real estate or automobiles or personal property, etc. It'll also look at the cash that you have on hand and also your savings accounts. And the reason for that is they want to make sure that you are truly in need of these funds, because being able to demonstrate that you need this capital to keep your business open is imperative to actually getting this particular loan. The other thing they'll look at is, your sources of income. They look at secondary source of repayment. If you have a spouse that's continuing to work, the salary could be listed there. They'll also look at your liabilities. And so they really want to look at your personal financial situation, because it is still a loan. Unless something happens later with the stimulus program, it's still a loan program right now. So personal financial statement is very important. And if you have questions, contact. Form 4506-T. This is a form that is a request for transcripts, because a number of years ago, when TurboTax got really popular, some people were actually, at that time, submitting a tax return to the IRS and then submitting a different tax return to their bank. At the SBDC, we call that a little thing called bank fraud, and we couldn't be any stronger in advising you not do that. And what it did was it got the SBA to start requesting your tax transcripts from the IRS. So those need to match up. There are unique situations to where they won't, like if you filed an amended tax return, but still send in your tax return complete with the amendment if that requirement is going to continue to be a requirement of the program. This is a form that I think is really important, and the liabilities and listing your liabilities are really helpful, because what it does is it demonstrates your need. It shows your creditors. It shows fixed obligations that you have for mortgage, for lease, for autos, for trucks, for other types of vehicles. It can be for equipment lease. It can be any type of credit expenditure that you have in your business that you need to pay moving forward. If you have any back payroll, for example, if you're a monthly payroll, if you pay at the end of the month, for example, you've accrued payroll already this month, and now all of a sudden your revenue stopped. I would put that down if you have payroll that you haven't put in there. So put everything that you can think of down there, because this is the need, and this is where the amount of the loan is going to come from, and it's going to be based on your needs. And this is how you demonstrate that need. So again, in recap, the disaster loans are for small businesses who cannot get financing elsewhere. You still need to demonstrate repayment ability and pledge collateral if you have it. And they can only be used for disaster-related expenses. So if you're thinking about adding that new equipment line that might cost 15 grand, but would really help you as far as efficiencies go, unless it's something that's critically important, such as you're making masks or some other hospital supplies, it's likely going to be turned down. Let's talk about some of the quirks that we've witnessed and we've seen both here and maybe a little bit last summer when we were working a little bit on the July 5th earthquake in Ridgecrest. Again, remember, it's for physical damage rather than economic injury. So at times there'll be questions that might seem a little more difficult to answer. Do your best to put down the question and always check economic injury when you can. So your credit history is going to be checked. And this is something that came up this morning. My sources tell me that there have been upwards or close to 1 million applications that have been filed in the state of California alone. And this is for the SBA Economic Injury Disaster Loan Program. Approaching 1 million, somewhere in that area. And there are a huge number of them are being turned down because your credit history is going to be checked. And one of the reasons that they are having a problem is because of identity theft. You know, a lot of people, they got a product, maybe a Lifeline or something like that, to where you have a hold on your credit and an inquiry cannot be made. And if you haven't gone in to allow your credit to be checked, it could be through any of the credit sources that are out there, Credit Karma, you name it. But if you have a hold on your credit to where it cannot be checked, it equates to almost an instant denial. So the system kicks it out. So keep that in mind. And also, if you do and are successful, and you hear like the next stimulus, for example, might have a grant program and you won't have to take out this loan then, you really didn't want the debt. The one thing that's important, that if you initially reject a disaster loan offer, it may not be available to you later. And this happened before, I heard about, and what the occurrence was is that if you reject a disaster loan, that is like saying that you really don't have a need for it, and it is not possible to go back later. This is prior disasters. This disaster is different. Things might change, but please keep that in mind as we move forward. Okay, some of the things that are also important, if you, for example, have 5 owners of your LLC and you're all 20% owners, all 5 of you must submit recent tax returns and also fill out the the personal financial statement. At 20% ownership, you're going to be guaranteeing the loan, and 20% is usually that threshold to where you need to be a guarantor and you need to help qualify that particular loan. If your most recent tax return, 2018, is not completed, submit a profit and loss statement for the end of that year. But in doing so, do so based on what you believe is going to be your tax return, your Schedule C on your tax return for 2018 or your other entity. So make sure that that's going to match. That's vitally important. And another thing, if you haven't submitted your tax return for 2018, do so immediately. Try to do that and work on that as soon as possible. It appears that the $1,200 individual payment is tied to people who have submitted a 2018 tax return. So I would imagine that there would be a process, but it is going to take more time, and the $1,200 per individual is going to really be sitting out there and not helping you or the economy if your return isn't in. We looked at the Form 1368, that's the monthly sales figure. And one thing about this disaster is a current profit and loss is probably not needed, but you know, it isn't probably needed, but it's something you might want to keep in mind. This could even get down to being as down and dirty as what were your sales for the first 6 months by month, January through June last year? What are they this year? So try to get your financial information up and ready to maximize your benefits for these particular programs. Collateral requirements, the loans are needed to be collateralized. So physical loans we weren't getting into, but the economic injury loans, for this disaster, it's over 25,000 are going to require collateral if the collateral is available. And that's an important distinction, if the collateral is available. SBA says they will not turn down a loan if the collateral is not there. So this is different from last disasters. When we were in Ridgecrest last summer, it was $5,000. So that's one thing, that's at least increased 5-fold from last year, and maybe that'll help get more money out as well. Disaster loans aren't for everyone. They truly aren't. And you know, it's again for working capital to keep your business moving forward, to get you to survive. We've talked about the term and the rates. There are other products that might be available. It was kind of interesting. Out of this, we came a couple of situations to where an SBA 504 loan, which is one for land and buildings. There are a couple of projects that might benefit that. The individuals had a loan that was a note that was called and was due and was in process, and kind of dropped the ball in one instance, but In another instance, there's just new opportunities and there could be better programs out there, even if they cost a little bit more. They're for your business to move it forward right now. Disaster loans are still loans. And that is one of the more troubling aspects, adding this additional layer of debt. Many won't qualify. And when they don't qualify, we anticipate a lot of them to call us, or they might get kicked out initially. So the disaster loan might get rejected. It might need more information. It might need clarified. And also farmers don't qualify. Production agriculture is out. It's hopefully available under a USDA program, but not SBA. But if you have a value-added agricultural program, such as, say, a winery or a specialty food manufacturer, that is different. That actually would qualify. So they're unique. And the reason they're unique is that unlike most SBA lending, these are actually direct from the government. Many of the other ones come in the form of guarantees or debentures that are pooled and sold. These are direct from the government. My information is that businesses of any size are eligible for the funds, including nonprofits, schools, and charities. I don't believe churches are available, at least particularly for this one. Small businesses, agricultural commodities, and cooperatives are also able to apply. Let's talk quickly about some of the other funding opportunities that might be out there. So there's hopefully going to be some revenue that comes in, although it's really not revenue, it's really debt. But it's money that comes in to help you survive your business problems that you have. Let's look at the other side of the equation. Let's look at the expenses that are out there and some of the things that you can do. And this is going to be loan deferments, maybe some of the other state options that are out there. We could look at alternative funding, bootstrapping, and crowdfunding, and then other issues. On the alternative funding, there's starting to be some really interesting things that are coming along. For example, yesterday, Intuit Corporation actually is doing GoFundMe, where they are actually contributing to campaigns to the tune of $1 million, up to $1 million, I might add, for small businesses. Facebook had grants out there for $1 million. They had $1 million collectively that were available. And as more of these larger businesses that are really impacted by small businesses' demise in this situation, we're going to see some more relief programs. So be creative and continue to look for things out there. Crowdfunding can be an excellent tool for actually, with all the holidays coming up, for example. We have the biggest holiday of them all, don't we? Mother's Day in May. And maybe not a lot of us are going to be out actually enjoying Mother's Day breakfast or brunch or dinner, but you can actually buy maybe a gift card from your favorite restaurant, and then when the situation eases, go out then. Same thing coming up for Easter on April the 12th. And then dads and grads in June. So there's a lot of opportunities for us to go out and to support the businesses, the small businesses that we really like personally. And this is a personal decision that needs to be made, but it really can help a lot of small businesses potentially get them enough capital to survive and other things. And there are a lot of other creative things that we'll be talking about this week and also in the weeks to come to try to bring that revenue back for businesses. So loan deferments. Loan deferments are generally in the term, or generally a 6 month term is what I hear most common. I've seen some that are 3 months. But if you have an SBA loan, for example, reach out to your lender. Your lender right now is probably hearing from about everybody in their portfolio. So reach out and see about getting a deferment and get away from making that monthly payment for at least 3, 6, or maybe even longer. And also look at other things that might be out there as well. If you have a private lender, it's not only for government lenders or a non-traditional lender, a nonprofit lender. Look at all of them and try to get that information and get information on a deferment. What we're seeing requested from banker lenders are recent financials. So be prepared to, again, have your recent financials out. Definitely a year-end statement, a year-end profit and loss. Most small businesses I've talked to have not filed their taxes for last year. But if you have, that's great, that's available. oftentimes they'll look for 6 months bank statements. They want to see a history of what's gone in and out of your account to try to demonstrate what your total need is, and then other financial information if necessary. Right now, the payments are not forgiven. It could change. It could change on some of the SBA stuff based on stimulus now or stimulus later. But typically, they're added back to the end of the loan, that particular part of the interest that is actually. So it's not really forgiven at this point. It's just deferred as far as time goes. But you're buying time to try to get your customers back and get your revenue coming in. And this is one way it can do it. And as I mentioned, it can apply for private and non-institutional type lenders. So your imagination and your debt, what can be deferred, look at all options. And look at other options too. Besides your mortgage or lease payment, potentially, look at auto, look at trucks, look at vehicles. I think a lot of lenders, credit unions and others, contact your insurance company. Insurance companies, probably not the happiest people in the world right now either, but definitely a little happier than most of my small business owners. So look at your insurance companies and look to get maybe a deferment on maybe your general liability, potentially some workers' comp if you're able to keep employees on, or anything that can help you at this time of need. Accounts payable, maybe to your deeper pocket suppliers or some of your manufacturers. If you're a real good customer, your supplier wants to keep you in business. And so try to lean on them at this time in order to see if they're able. In many cases, they're not able, but in some cases, they are able to help you, particularly the bigger businesses that are along the lines of businesses that are doing okay now. Your equipment leases and rents, look at those, look to defer some of those, and any other fixed or significant debt or expense. So what we're trying to do is we're trying to put it off and put off the liability that we have to buy time to get revenue and to get back to some form of normalcy. So another huge issue, and this is going to really be paramount and really already should be, is to understand and manage cash flow over the next several months. And, some business owners right now are working 12 to 16 hours a day to try to bring in some revenue, and they're doing it without the employees that they had, and they're really just totally out there busting it. And others, have said it's in my best interest to close down. Now, they might have a little more capacity to work on their business since they're not solely contained in their business. And this is a good exercise for that, is to understand what your cash needs are going to be over the next several months. So we've gone in already and we've already looked at the revenues and we've conservatively estimated our sales. And we've tried to get an idea of what we can defer. So we're trying to get an idea of what our expenses are going to be. I recommend people doing it on a monthly basis. Month to month is good. We have a nice tool here, just a basic Excel spreadsheet. We're willing to share it with anybody out there, but understand it's going to change frequently. And here's a copy of, you notice I've already moved to next year because like most of you out there, I'm not too happy with 2020. But definitely do it for 2020, but start trying to estimate what your cash flow needs are going to be. And this is an excellent Excel spreadsheet to do that. So what I might do right now is I might go back into March, and we're on line number 1. Right in here, I might try to put in my cash on hand, and I might go to my particular banking account, my personal checking account, or even my savings account if I can put that into the business. Then what sales I do have, I will add those. Hopefully most of those are cash sales now. And then I'll list my expenses, and that'll give me a cash position at the end of the month. Then what I can do is apply that cash position up here and start over and do it again. I understand this is going to change daily, and at worst case, several times a day. But it is an exercise that I think that by being proactive, we can try to help what our need is and to try to work what our cash position and our cash problem is going to be. So cash flow forecasting is going to be huge. The SBDC is an economic development organization. We're not really a social organization. And when we work with businesses, we really like to see that they provide benefits to our entire community. And one way of doing that is by hiring and retaining employees. So it's very, very troubling for me to have a slide here that says employee layoffs. But as heartbreaking as it is, especially since employees have been so hard to find over the last year or two, you know, the big picture is oftentimes more important. And by being able to lay off as many as you can, as quickly as you can, might be the difference between you making it or not making it from this disaster. You know, I like to say, and I like to have people involve their employees. Some might want to work part-time. Some may want to be laid off until the crisis subsides. Situations will be different for everyone. Somebody might want the unemployment insurance, for example, or maybe they have a need to where there's a family matter or somebody in their family is ill. So situations will be different, but by involving everybody, it brings you the best chance of bringing back as many of these employees after you're able to get back to normal. And be creative. You know, you can share resources. We're starting to hear some wonderful creative stories about what people can do. I've heard of one where some of the laid off restaurant employees are starting to come back and trying to get food donated to where they're going in and they're actually creating food that can be shared with the employees, some of their customers that are maybe struggling, and some others. So if you're on unemployment, I really don't think that this is a violation of your unemployment to volunteer some time back to your employer. And if your employer and others are able to come up with maybe the raw material that can be actually created and actually shared with others, there's a lot of opportunities out there to where we can really come up with some good stories. So, you know, try to, as much as possible, even though I apologize, we don't have the time to cover it today, and we'll probably get into this more. There's a lot of state resources available through family leave, state disability insurance for those that are infected with the virus, and also unemployment insurance. There's a lot of really good information if you go to, say, your Governor's Office of Business and Economic Development, GoBiz. You can go to the EDD, and you can go to other sources to find those state resources that are out there. So as I mentioned at the beginning, this is business as usual, as I call it. So let's be creative. You know, a strategy is really needed right now to succeed. And brainstorm ways that we can stay effective and relevant as long as possible in order to ride the crisis out as the best we can. We're going to have businesses that have already approached me that just says, I can't take another disaster. This is going to be it for me. I'm going to liquidate. And I expect some to do that. And there are going to be others that really want to do everything they can to move on. So look for the opportunities that are both available in your business for the short and the midterm. You know, consider delaying some of your longer term objectives and focus on the shorter ones that would actually be more pertinent to work toward. You know, I like to advise people to get a mentor. Okay, I do run the Small Business Development Center, and we have 15 of them, maybe closer to 20 at our particular center. And around the state, there are literally hundreds and hundreds of them. So use a mentor, and if it's not an SBDC mentor, use one that's out there, but find somebody to bounce ideas off and gather opinions from multiple individuals. Before especially making that dramatic decision. You know, connect, you know, I don't have a crystal ball, my time machine's broken, so I'm really not much help there. But technology-wise, quickly implement new tools, such as the program we have. And really, I want to get to questions, so I'm going to blow through these. But really, this is a really great opportunity for small business owners to step up and to really, really excel on the leadership platform. It's really a great opportunity to really take the all-in attitude and to really set yourself apart and really showing your great leadership skills. So step up. Remember now more than ever, cash is king. Protect your most precious asset. And right now that is going to be cash. We can help you a variety of ways. I think I've documented most of those through the SBDC program and others. Reach out to us. It's a different way that we connect with you, but we are out there via Zoom, telephone, etc., in order to meet with your needs and to meet with you. So we're open for business. And with this, what I'm going to do is start taking some questions. If you have questions, please actually go back and let's go to those right now. First one is the call with GoBiz. GoBiz has a lot of useful information, and there's tons of useful information out there. Our credit, and we actually have the legal definition and a few things. So we're getting some really nice shares in the chat room, in the chat box. So what I'm going to do right now is I'm going to jump into the questions and answer some of these questions. Okay. So the first question is, in order to fill out by hand and then scan and submit, where do you get the disaster relief forms? For many of you, if you ask for them, we will try to get those to as many people as we can, and then actually get those out in the form of an email. This is a great question. Is there a special email address? Yes, we will try to provide that. Again, that was only information that came to us right before we got on live here. So we will be providing email address for those that are looking for it. It's also probably available online. Some other resources that are coming available locally here in our Bakersfield community is a call with our congressman. And unless you probably already bailed off to jump onto that, it might be difficult to get that. But maybe there's more information that's going to be coming this afternoon. The best way to stay up to date, I would check trusted resources that you find. Obviously, one industry that's doing very well these days is the news industry. And that's one way. We're going to have this every Wednesday. And every Wednesday, hopefully by next week, we are past the majority of the economic injury processing and filling out the applications, and we're moving on to next steps, etc. So we will continue to try to keep up to date, but there's a lot of news resources that are good. The Wall Street Journal, for example, is one that I've used in the past. So there's plenty of resources. One question is, to demonstrate the need, are you asking me to apply for loans at other banks before applying for the SBA loan? And the answer to that is no. The demonstration of the need is actually going to come through the process of the information you provide. So it is it's an excellent question. Credit available elsewhere would imply that, but right now, no. Don't go to another bank unless it's probably outside the need for the disaster, or if you have a banking relationship and you are bankable. Mary asks, do you mean 2019, not 2018 tax return? And no, Mary, I do mean 2018. The tax return for 2019 is not due now for individuals until July 15th. And so essentially, since you will have a large part of the population that has not submitted for 19, they are going off of 2018 data. You will need a profit and loss for 2019 though, and it is helpful if you have already submitted for 2019. Okay, some more questions. If you have a retirement account that is used for the next 30 years, will that help? That you've had for 30 years, will that hamper your ability to qualify for the loan? Good question. My understanding is no. No, you will not actually have to go in and get rid of your retirement funds in order to use those to survive. That is the best answer I have for you today. Let's see, we have cash on hand and a credit line. That's good. Along with accounts receivable. Sounds like we won't qualify until those resources are used up. Well, I think that's a perfect example of using the cash flow management tool to demonstrate how much resources you have. And maybe after your cash and your credit line, you will find that it's only going to last you 3 months and the crisis is going to last 6 months. I would still probably, if it was me, if I thought that I was going to have a need beyond, if you have enough resources to get you through for the 6 months or 12 months, every business is different on how much cash they're burning. So I would try to do that. I would probably try to apply, even though you do have resources. Some more questions. So I have a friend who's in the horse business. I like horses. And horse shows are her income. These shows have been canceled. Can she apply for loan to feed her horses? That is a great question, because, you know, a horse show by most senses isn't really, it's more entertainment, and it isn't really production agriculture. My question would be yes, you can apply. My answer to that question anyway. And I'm not totally correct or totally wrong, I guess, but I think I would give it a shot. A couple more, and then we'll get out of here. Are contractors eligible for SBA injury loans? Absolutely. Absolutely, contractors are eligible. They have jobs in process, and they might not be impacted as much. For example, we still see a lot of road work going on and other aspects. But yes, contractors are eligible. Okay, one last question and I'll get you out of here. And hopefully we'll see you either tomorrow on our telecommuting or back next Wednesday. And this last question, if a borrower has past due payroll taxes, will that require those to be paid with loan funds prior to business needs? I don't have an answer for that. I just know in the past, and for most SBA type lending, that, you know, the disaster loans cannot be used for past due payroll taxes. I would think it's a situation by situation basis, and maybe the taxing authority under the circumstances will maybe freeze or defer the payment, and the funds could go for other uses that could be used to keep the business afloat. Okay, please fill out your surveys. I want to thank everybody for being here, and I really want to wish you the best. I know everything's tough out there, and it's very difficult. And we're going to be here to meet your needs and do everything that we can to kind of see that you can, as many of you, get through this crisis as possible. Remember to stay safe and keep your employees safe. And until next time, until next week, it's Kelly Bearden. We'll see you next week. Have a great day. Bye-bye now.